Good morning. Welcome back, everyone. Today we are doing a new video on Coinbase stock, ticker symbol COIN. And the reason we're doing that is because Coinbase recently just acquired Deribit options exchange, and that's basically where I did all my options trading during the first few bull cycles. And that should bring more profitability to the revenue here at Coinbase because that's they have the highest volume on options, Deribit. So moving forward, I think Coinbase will become a little bit more profitable, which is surprising because its last earnings it actually did dismal, and it's probably due to the fact that the crypto market was grinding the lows for a while, and now that we have this little bit of euphoria, I think it should continue. And I mean, really, you're looking to break the highs. This is a W, right? This is not like a head. It could be a head and shoulder, but it's also a W. And the reason why I'm saying it's a W is because the lows were basically protected. If the highs get rejected, then yes, we can consolidate in this range for higher or lower, etc., etc., etc. I will get into that moving forward as we show the doodles. Okay, so I showed you the weekly. Here's the monthly. On the monthly, kind of looks like you're making a huge inverse head and shoulder. Yes, you see this head and shoulder formation here, but I do think it's a fake out for continuation up because you're rejected from this level here and the liquidity is here. Well, now it looks like we're going to hunt that liquidity out around 360, 370, and that's basically what I'm looking for in the next few months to come. As you can see, the buyers have stepped up on support, which is around $200, and really around $200 is a solid support moving forward for Coinbase. If you look at it on a weekly time frame, you have 220 to 225 as the support. So you have on the weekly, that's your first warning sign is opening closes underneath 220. On a monthly, you have the warning of underneath 200. Obviously, the weekly will give you the warning first, so be aware of that. If you go to your daily time frame, you have even a higher warning of rejection, which is around 230. Keep in mind that your EMAs right now are crossing above into the bullish territory, meaning that expansion to the upside should continue due to the fact that the volume of buyers are overpowering the sellers, and you have your EMAs crossing, and this is a golden cross, your lowest EMA crossing your largest EMA after this huge descending channel bull flag breakout, basically short squeeze city and continuation markup phase. All of that is looking good, and you have this mini head and shoulder mini inverse head and shoulder here on the daily, which breaking out. If this is your neckline here at 233, your measured move here is 1 2, so it would be 1 2. You would be looking for almost 320, okay, for the measured move target. So be aware that that's where we're looking at, and that whole rounding bottom would be completed if we did that. Now I'm going to show you the doodles of the Fibonacci's that I already drew, and this is what I was looking at. And if you kindly can see this, here is one accumulation range. Here's that rounding bottom thing that I was talking about. Here is that all over again. Hence why I'm saying a double bottom possibility here. Now here is your rejection area, right? This is where all the rejection started and all the descending occurred. And this is why we're coming into that neckline right now at 280. Now, the second we have daily open and closes above 280, I'm looking for 330 to be a quick, fast impulse move because it'll be a short squeeze, right? We'll come over here, maybe do a shallow retrace, and then we'll probably gun into the higher levels to take the liquidity, find a resistance, come back, find some support, put in a little bottom, and then break out further. This is logical and probable due to the fact that more and more people want to buy and hold this. And if that is true, then this is how we should go because it is going to be in an uptrend. And you can see that as I zoom out here. Let's do it from here. And we'll just encompass it like that. Why not? So that's why, oh, oops. There you go. That's why I'm looking at it like this, okay? This can be white, pink, whatever, it doesn't really matter. There you go. So this is how I see Coinbase. So now, say at 281, we get that rejection, which I'm saying. This little rejection right here. If the rejection comes underneath 264, okay, between 209, I will be looking to accumulate this. I'll look to accumulate this for the long term upside move in this range. So basically, uh, between 264 to 209 is my accumulation zone area if I can get it. Aside from that, if the price gets above 281, I can use 281 as a buying floor into 331 and then basically have my stop loss over here. Because if we reject the middle of this channel, right, the only thing that we can do here, if we reject here, is come back down. And what we're going to come back down to is the EMA support right here. All this stuff here at around 230 to 220. Worst case scenario, you'll go to 209 because we're overbought. So for us to fill in this gap, because there's a gap right here, guys. Let me turn off all the doodles. You see this gap right here? After an impulse up, look, we've done this before, okay? Consolidation, gap, impulse up, okay? We did two gaps, but then we eventually filled it, right? Same thing's happening here. We did one gap, we can do another gap, and that other gap can go all the way to 330, but then we can flush it all back down into the 200 area, all right? Because if we don't get above this level, that means it's a lower high. And we are, yes, we're going in an uptrend, but the uptrend can be pivoting right here. This 280 can be the pivot point where we come back to test support at $210 for that upside continuation. So that's the reason why I'm pointing out these levels. Use them to your advantage. I do like Coinbase on the long-term aspect. You can see that this asset, I mean, is pretty decent. If you go, this is the technical analysis, right? Now to the fundamental analysis, you can see that the all-time high is 277. Oh, sorry, all-time high is 350, and the low is 142. We're in the middle, basically, right? So this is like fair price, and it makes sense because we're in the middle of the consolidation. If this is the high, this is the low, we're like over here. This is the middle of the consolidation. It makes complete logical sense. Now, the crazy thing, this company is marketed at $70 billion. Okay? The market capitalization of this company is $70 billion. That's the only like alarming aspect I have of that. Okay? If you take for comparison, okay, 70 billion, Solana is $95 billion market capitalization. What the heck? Yeah, okay. So you guys tell me what's the better trade for you? Something that's $271 with the market capitalization of 70 billion, or something that's $184 with the market capitalization of 90 billion. Okay? And the only difference in the market capitalization and the reason why the difference in price is supply. Coinbase can issue more shares, okay, and they can dilute their share price to have more buyers buy in. Solana should not be able to distribute additional Solana because they want to have more investors come in. No, if the investors want to come in, they have to buy at this price and they will mark it up. If investors want to come in on this, if these guys don't do like Berkshire Hathaway and split their shares, then great. This can go up to $1,000 a share. This could be like a Chipotle stock, you know, from 300 it could go to 3,000. But if Coinbase wants more people to invest, they will split the shares at maybe 1 to 10 and get this Coinbase stock from 271 to $27.19 so mom and pop and everyone else around the world can buy into Coinbase and allow Coinbase market cap to grow as the share price is reduced and more people can invest. A lot of people are going to be butthurt trying to invest at 271, okay? They just like, oh, I only have $200, $500 to invest. That's only 2 shares. Blah, 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 blah. Stupid shit like that, okay? So just be aware that is the fundamental analysis on the asset. Uh, the sad thing is the 93 billion of Solana, the market cap is going to grow. I don't think I'm surprised it's even at 93 billion. What about wow, Ripple is at 142 billion. What is the use case of this company? what does this company do? How is it generating profit? Compared to Coinbase, I can give you a business plan, business model, and understand this and that and the other. What does this do right now to give people who are investing in this money? Where is your return on investment? How are you getting it? How is this company generating it? That's all I have to say on that one. I think we're basically done for the day, guys. I don't want to drill in too deep aside from the fact that this is a stock, and I think the stock market is got the same problem like the government. They will print more shares as they need more money or more liquidity, and that's one of the reasons why crypto is probably going to outdo the stock market, because crypto has limited supply. It's not going to just continually go. Let me look at this one real quick. Tau. I'm just curious to see the market cap. Are you going to tell me the market cap? Market cap, market cap, market cap. No. Oops. The reason why I'm looking at this is right now I'm like very deep into AI. Uh, Man, I got to check this one out. Let's see. Hold on. Coin market cap. Excuse me. Excuse me. Okay, this coin market cap is saying this is 142 billion, when it was saying 192 billion on TradingView. So I don't know who to believe. Here's Tau. Market cap. Come on, come on, come on. Where is it? Market cap is 4 billion. Interesting. That is nothing compared to what I think this can go to. I think this could go to 10. I think you're going to see Bit Sensor Tau at $4,000 a share probably. This is doing exactly a nice W, and it's doing lower highs, but this lower high is eventually going to break out and then just expand up. As I'm looking for 1,200. Hilarious. Okay, well, that's basically all I have for you guys today. I hope you guys have a great day. Take it easy. If you have any questions or concerns, leave it in the comment section below and I'll get back to you. Aside from that, guys, trade carefully. I hope you guys can understand the difference between tokenomics and fundamentals, and you can see the market capitalization difference between some of these crappy assets and these better assets. Oh man, I'm sorry. I just want to see real quick what's ETH's. ETH market cap is 319. Okay, Tether 150. Solana is 95 billion. That's insane. Here's a useless coin. Take all that liquidity out. Here's another useless coin. Take all that liquidity out. All these coins will eventually get sucked into the ones that have use. Like, what is this nonsense? This is another network that's useless. You don't need it. You don't need a lot of this junk, guys. A lot of it. Now, one asset, I'm like, why has nothing happened to it? Here's one, Chainlink. This is a fantastic Oracle service asset with use case being used on a regular, yet has done nothing for multiple bill cycles. I think I was recommending this at like $4. Yes, it's at $16. But this is one of the assets where I'm like, why is this not like a $5 billion market cap? Yeah, it's still nowhere near where it should be. I mean, I would say this is $50 plus asset, but it's just not there because people are just not aware of what's going on. So it's unfortunate, but that's the crypto game. It's all about hype and pump and dump. It's not about tech. If it was about tech, Chainlink would be one of the top. Tau would be one of the top. Okay, XRP would be non-existent if it was about the tech and not the hype. If it was not about people trying to get rich fast on BS. Anyway, have a great day, guys. Be safe. Take it easy. Love y'all.